Hey traders, this is Ron Haight. Hope you guys had a great day. As always, nothing in this presentation shall constitute a recommendation to the buyer selling security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. I'm going to start out here with the Dow. Now I added two indicators to my chart. The green lines, 2 standard deviation John Bollinger Bands. The purple line is a 200-day simple moving average, just like the 50-day here in orange. This is a 200-day simple. So institutional moving averages. And then the red line, of course, is still the 20-day EMA. You can see right here what the lines are. So here's the thing. We were down. If you take actually Friday's end-of-day close to the lowest close using the futures market of today, and I can show you this by going to charts on Thinkorswim using the YN, which are the Dow futures. We went from right around here all the way down here. That is the equivalent of 1,000 points drop in the Dow, or $10 in the DIA. If you look at the diamonds close on Friday, it was 264.81. Our low was 255. Again, almost $10 here in this market, which is huge. Remember how I told you on the weekend, 3 big days of selling pressure? This is going to be a little different than May. They're back to back. And I told you also, watch the 50-day moving average in orange. I don't like hammers. They're fake hammers. They're rubber hammers. They're not to be trusted. And you saw why. It just doesn't work from a historical perspective. They're not that good. They're not that believable. We gap lower, close lower. We closed off the lows of the day. If I take you back to the Dow, you can see, if I zoom in here, right around here was 3 p.m. Eastern, New York time. That was the bottom. We started to rally, and then we peeled off right into the end of the day at the close. Now, as I do this video, it's about 4:31 p.m. Eastern. All right, back to Dow. So where are our targets? Well, just like I was talking about in the weekend video, go to the 200-day, and then go to the May swing low. We break the May swing low, and that's where things could get ugly, because the next major support level would be the December lows. Just like I said in the weekend video, which is a really good video to watch, which was yesterday's video, we're not going to get there in a straight line. Of course, we could. History says probably not. You go down so many days, then you bounce, which is why I brought in the 2 standard deviation Bollinger Bands. When you get outside of these things, essentially what that means, 90+% of the price action is going to be within inside these bands. When you get a full candle outside those bands, the rubber band has been stretched too far, too quickly. There's going to be a reversion to the mean. Now, those reversion to the means, if you've never followed along with this, it doesn't mean we're going all the way back up here. All it means is we could literally get an inside day tomorrow, a sideways move that puts us back inside the band, and the oversold condition is gone. That's it. It could be a one-day thing. Maybe it's a 2-day thing. You never know. But usually this means too far, too fast, we should see a bounce. What happens if that does not occur and we have another equally bad day as today, tomorrow? Well, then it's even further stretched. It's still a very, very high probability of at least a sideways move to digest this quick drop. Again, from a trading perspective, we usually get a bounce here, from a probability perspective, I should say. You just have to see what that bounce is going to look like. If I take you to the Qs, they were down 3.5%. So when you compare the Qs to the Dow, Qs took it on the chin a little worse, right? By almost 0.6% more. Their target's the 200-day. Well, they're not there yet. 175, another $5 lower. Then watch the 170, and then it's back down here. If we go to something like the IWM, down 3%, shocking, this wasn't even worse. Intraday, it sure was. This one is already down at the May lows. We were starting to test it intraday. So 145 is the level to watch. If that fails, down here we go. If you look at the December sell-off, that was an incredible sell-off. In fact, it was one of the worst Decembers on record. Because, let me just zoom in here and show you. Yeah, here we go. Once December started, December 4th, first day was the 3rd, December 4th, there was one up day. Which is right there, and that wasn't much of one. We went straight down. This is unusual. Doesn't mean it can't happen this time, but usually what you're going to see is a little back and forth, maybe up, down, and we work through these. But if we crash through these lows with a hot knife through butter, like a hot knife through butter, that is not good for the bulls at all. How about MDY? Down under 3%, only 2.8%. Look what happened. We closed right on the 200-day moving average. Isn't that amazing? Funny how that works. Target down here at 330 and then all the way back down here. If I take a look at the VIX, $VIX, look at this surging, 39+%. Here too, we're way outside that green line, way outside the upper Bollinger Band. If you go back and do a historical check, which is actually a really fun little task if you want to do it, just look for massive spikes out of the band to the upside, and look what happened. Maybe one more day, and then there was a reversal, bounce, reversal. If I take you back over here, look what happened. One big surge. This was the big surge, immediate reversal. Again, using even something like the VIX as a guide, you're going to say, whoa, if that whole candle gets outside the Bollinger Band, there's usually a reversal. Our whole candle is outside the Bollinger Band. We can't say that the VIX, from a technical perspective, is due to go back up here. You never know how much the fear goes and how it gets, what excitement level is there. But again, this is indicating we probably fell a little too far too fast here. If we take a look at the XLF, the banks, down 3.33%, they're almost at the 200-day in purple. We would then go to the lows in May, lows in March, and then down here. Transports, IYT, down 3.2%. These puppies, if I zoom in, they actually gapped right at their 200-day, hot knife through butter. They never really recovered at all. Their target's going to be the May lows around 175, still about 3% lower. XL, let's try this. Let's do SMH first. Semiconductors down 4%, cut through their 50-day like a hot knife through butter. Their next target, 200-day at 102, $6 lower, 5% or so, and then back down to 97.50. These are future targets for these securities, if you will. They're not guarantees, they're just technical targets. Doesn't mean we're going to get there tomorrow. I know it feels really painful right now. It might remain painful all week. We don't know. But that's where the next buying level of support may come in at from a technical perspective. Just wanted to say that again. Let's do XLP. These are staples, down 2.6%, completely blew through the 50-day. We actually opened above it, hot knife through butter, target. These lows right here, which come in with the purple line, 200-day SMA right around $55. How about utilities? XLU only down 1.4% on the XLU, but we did set a new near-term low. This one's probably going to hold up better. It typically does, not always. I mean, if you go back to December, you saw it got beaten up a little bit, couple dollar drop. In May, which is right here, it's like a $2 drop. Next major target, probably the 200-day, which is going to tie in with this low, so maybe $2-3 lower there. And then if we take a look at Apple. A lot of folks follow Apple, down 5%, $10, right through the 50-day, which would have been the initial target. And if you look at something here, look how it broke through the 20-day. It's not a good thing, right? It didn't even try to bounce really. Well, we did the same thing to the 50-day. Be interesting to see how it does at the 200-day. We break the 200-day, we go back down to the May lows around 175. If we do Google, 3.47%. Here, the 50-day in orange, 200-day in purple are both coming in at the same area, 11.25. Then a gap filled down around here, 1075, and then back down here. If we look at Amazon, 3%. Notice how they dojied right off the 200-day. Funny how that happens. It hit it, began to have some short covering, still finished 3% down. But look to the end of May, beginning of June lows, 1,700, about $60 lower. Sort of another day like today. And then you have this shelf support around 1,600. And then Deere. Remember I said, the way Deere got sold off in May, if the same thing happens, we might see a redo. It sort of looks like it's happening. I mean, Deere hit the 200-day, went right down through it. Its next support, $135, $15. That's 10% lower. So across the board in terms of equities, definitely bearish right now in the daily chart, but overextended. How about gold? Gold's up only 1%. The Chinese revaluing or devaluing the yuan, trade wars, all this good stuff in the headlines. There's just more selling pressure right now. Gold broke out of this elongated bull flag. I have to take you back 5 years, and you would say, whoa, 5-year highs. Okay, how about 10 years? There we go. Here we sit. Next target, I'm not saying it's going to get there, but on GLD, you're talking 170, 180, 40, 50 bucks higher. 30, 40 bucks higher. Sorry, can't do my math right. On GLD, 300-400 an ounce on gold. I'm not saying it's going to get there, but technically we are breaking out. I would like to see more volume, frankly. It's not and it hasn't been epic volume. And here's one other side tidbit. You think with the market absolutely, going in the toilet today, all the negative press that's out there, this is all what gold did. Not exactly a ringing endorsement for the world ending, is it? How about silver? It was only up 0.92%, and it didn't even break out. This is sort of makes me believe that gold and silver aren't quite ready to just do their thing yet, especially with silver continuing to lag. Are they both bullish? Technically on the daily chart, absolutely. Weekly charts, absolutely. Monthly charts, absolutely. But they're not trading in tandem just yet. So some caution still. I'm not ready to put the gold and silver in a new bull market, if you will, but they are hanging in there. If I had to pick gold or silver to trade, I like gold better. It's already broken out. And then how about the gold miners? George, Delta, X-Ray. These guys reversed off their highs. They didn't even want to finish at their highs. Interesting. Still bullish. I could still consider a 20-day EMA as a trailing stop. It did not work a couple days ago, but nothing is ever going to work 100% of the time. And then it was followed up by a bullish engulfing day. That's positive. So maybe the red line still is a trailing stop to consider. But that is your outlook. That is not your outlook, but the review of gold, silver, and GDX. And just going back to the Dow, we'll finish with that one. Bears have the edge. We're overextended on the daily chart. Target here, 200-day, and then target down here. If we get a bounce and we close back inside the lower Bollinger Band, oversold conditions are immediately gone, and bears would still retain the edge. The only way the bulls would start getting an edge is if we retook, closed above some of these moving averages. We just crashed below. And right now it's a tall order. That's a lot of price to conquer. I hope this was helpful. Try to keep things as simple as possible. The trend is down. I warned of it this weekend. We started fracturing moving averages, and the trend's going to remain down until the bulls regain moving averages. Right now the volume is very, very heavy. This is indicative of, in my opinion, more likely selling to come. I don't think this is quite over just yet. Doesn't mean we can't bounce in a day or two or something, but the trend is down. Protection is paramount, I think, across the portfolios. You don't know how long these things can go. I mean, look at December. It was horrific. May wasn't that bad. And keep in mind, they were saying the same stuff as they're saying now, back in October, back in December, back in May. And the market regains its momentum. Right now, there's a new worry now. It's the currency issues. We'll see what happens. Trade what you see, not what you think, is always my opinion. Trend is down. Wish you guys all the best. I'm back with you in tomorrow's video. Take good care.